investing in the crypto industry is very risky business, especially considering that these bubbles just keep appearing in the market one after another.
I think this is the sixth bubble now, the sixth Bitcoin bubble that we're in now.
But it is worth it, guys, because blockchain is the future. Guys, today I want to talk about a very significant topic: investments. You do know that if you don't invest your money into anything, you're not going to get any wealth, right? Yeah, sounds pretty obvious. So let's go figure it out. So if we're going to really oversimplify this, there's really two ways you can do this. The first one is simple. You search for assets independently, then you calculate your profitability, and then you just invest at your own risk, which for someone like me who doesn't really have a lot of experience doing that, that's kind of risky. Another option is you can entrust your money to funds. Now, there's many different types of funds out there, but at its core, what it is you give up a certain amount of your money and then you expect a profit in return. Now, CyberCapital is one of the most successful and trusted funds out there. And guys, today I have an interview with Justin Bons. Justin is a co-founder and chief investment officer. And I think we're going to ask him all the questions you guys want to hear the answers to. So let's jump right into it.
Hi, Justin. How are you today?
I'm good, thank you. I'm doing great.
So you guys specialize in investing in crypto assets. Can you kind of tell us what kind of services you do? What do you offer your clients?
Absolutely. So CyberCapital is a cryptocurrency investment fund. So we invest in, essentially we have a diverse portfolio of many different cryptocurrencies. And our focus is on fundamentals. So Fund A, our first product, is a long-term fundamentals-based fund. And basically what that means is we do a lot of analysis and research to try to determine which projects are, essentially have the most merit. But, saying that we have a big focus on things like utility. We like to see cryptocurrencies that actually have real use. I think that's important for us. We don't really believe in the idea of, crypto being a purely speculative asset.
Can you tell us maybe what kind of percentage you guys charge your investors, maybe what the minimum amount is for an investment?
So it's essentially you need to be an accredited investor, and what that means is you need a minimum investment of 100,000, which is something that I have to say I'm not fond of, because I feel it's very exclusionary in the way that these type of rules work. However, we are a fully registered fund under the financial authorities in the Netherlands, so we are fully compliant in that sense. And it's one of our goals to acquire the licenses we need to actually accept smaller amounts as well, but that's going to take a bit more time. So.
Is there a percentage that you guys charge to your investors?
Yeah, so our fees are actually a standard hedge fund, mutual fund type fee. So it's 220. So it's a 2% fixed fee per year that goes over the total of the investment. And then we have 20% that actually goes over the profits that we make for our investors. And there's also a high watermark. So if we don't make profits, the next year or even 3 years later, then we don't actually charge a fee. So in that sense, it's a fair fee structure.
Are there any kind of crypto assets that you guys manage in particular? And can you tell us about those?
Sure. Now we have about, I believe it's about 60 assets under management right now. But I can tell you what, say, the top 3 assets are in our portfolio right now. That's something that we are public about. Currently, our largest holding is Ethereum. Our second largest holding as of today, I believe, is Dash. And our third largest holding is actually Bitcoin Cash, actually. The reason for Ethereum, I think, is an obvious one. It's the blockchain that currently has the most use, has the most businesses building on top, has the most institutional adoption. As far as we're concerned, it's actually every single metric. Ethereum is winning, except for obviously market capitalization and brand. But these things will come. I've been a big proponent of the flippening for the last few years, and I'm still preaching that narrative. So. Yeah, and Dash actually we like because of its governance mechanisms. So the Dash system, for instance, of masternodes and a self-funding blockchain, a treasury system with the proposals. That's a system that's, in my view, much more resilient.
If somebody does approach you and then they're like, you know what, if we work together, what kind of profitability can you give me? I mean, like, is that something you can project to someone? Is that something you can tell someone, or?
No, that's not something I can project in good conscience and in all ethics. Honestly, I think anyone who says that they can guarantee any sort of profit, I would be very wary of that claim. I think that's generally not how the world works. I think that opportunity is coupled with risk, and therefore, no, I can't give any guarantees in terms of return on investment. But I think the more important question to ask is for our investors at least, is this something you believe in?
Yeah.
Because if this is something you learn about and something you believe in and something you want to be invested in, something you want to have exposure to, then I think the service that we provide is we provide a portfolio that people can be invested in that's very thoroughly researched, with a lot of due diligence, with a lot of understanding, with a lot of insight. And one of the advantages of having a fund like this as well is we get to talk to a lot of these people. We get to talk to a lot of the developers. We get to talk to the important people in the space.
I wanted to ask you about risk. What are the main risks, I guess, when it comes to funding investors? What will they encounter?
Well, I think the last year has been a great example of a very present risk. The market on average has moved down about 85% since the start of the year. And we've mostly tracked the market down, actually, as a matter of fact, because Fund A at least does not hedge risk in the same way that some other funds might. So what we do is we really say, look, you can get exposure to cryptocurrency, but that's really your choice if you want that exposure. Like, we'll do the best job that we can to have the best portfolio, geared towards profit. But on the other hand, these type of cycles of bear and bull runs that constantly happen in Bitcoin, I think this is the sixth bubble now, the sixth Bitcoin bubble that we're in now, at least on the downslope of it. And this is a kind of pattern we've seen time and time again. So because I actually believe in cryptocurrency itself, I'm confident in its long-term prospects in that sense. But I think in terms of risks, I think a big one obviously is just market volatility.
Okay.
And the market is actually extremely irrational, especially over the shorter term. The market can be extremely irrational. So we could see these type of moves that they don't really make sense, in fundamental terms, that don't make sense. This fear and greed that kind of drives markets. It can be very unpredictable. I have to mention security here. Mm-hmm. Generally speaking, I think we do I'll expand on security a little bit. We have more than 80% of our assets in what we call deep cold storage. So essentially what that means is we have our seeds split between pieces of paper sitting in underground bank vaults in multiple locations in different jurisdictions, essentially. So
earlier you actually said something kind of interesting. At least with the people that I interview, a lot of people don't want to refer to this as a bubble. And you flat out said, this is maybe like the sixth bubble that we've had.
Yeah.
You're that's okay for you to say, right? You believe that this is a bubble.
Absolutely. No, I think this is a bubble. And the thing is, I don't mean that in like a derogatory way either.
Yeah.
Because in many ways, historically, all great technological innovations have been accompanied by bubbles. This is somewhat the nature of human speculation. I often make the comparison to the dot-com bubble. The dot-com bubble that happened in 2001, and that was a huge bubble. I think some companies saw like a 95% loss a few years later. It's massive, bigger wipeout than what we've seen here. But at the same time, people are using the internet, and some of the companies during that period are insanely successful. They're some of the biggest companies in the world. So I think it's healthy to kind of see things for what they are.
For the most part, the average person doesn't know much about it, and especially with the market going down and being very bearish, being so densely bearish, especially over the last year. Can you actually talk to us about the collapse that kind of happened recently, about the most recent bubble? Why do you think something like that happened?
Well, I mean, it has to happen, right? So if the market goes into this type of bubble pattern and we have this bull market, we kind of have to have a bear market afterwards. It's a pattern we see. I'm not a big believer in technical analysis per se, but I'm sure many of your viewers are familiar with the classic bubble chart. And there's something to be said about the type of psychology that occurs and the type of cycles that human beings go through. So in that sense, like, the price needed to rebound from the high point. And that's I think technical analysis plays a part in this, in terms of it becoming self-fulfilling prophecy when enough people believe in it, which I think is the worst thing aspect of this. Yeah. But in that sense, it's, people want to buy on the low. People don't want to buy on the high, right? Smart people at least. Yeah. So in that sense, it needs to go down for more people to be comfortable to get in. And it needs to go down for people to not feel like they're buying it on the all-time high. And it needs to go down because some people want to cash out on what they think is the all-time high. And that's just kind of how the dynamics play out. So I've been in crypto for more than 5 years. And so I've been through some of these cycles before. And something I've noticed is we've had like bull periods when the fundamentals were quite bad, actually, like comparative to different periods. And we've had bear periods where the fundamentals are like incredible. So it's quite nonsensical often in terms of like there's a disconnect in terms of the fundamentals and the price movement, at least over these shorter time periods. Over the longer term, I think we see a trend of cryptocurrency gaining dominance.
Can you tell us maybe how this affected your fund?
Yeah, no, I certainly can. I mean, look, we've had an 80% reduction in our assets under management. So we've had to, I think like a lot of other cryptocurrency companies, we've had to downsize. We've had to kind of cut things back a lot. So at this point, I think like a lot of companies, they're just trying to survive the bear market. And I think that's what's important. I think that's a big test for a lot of companies right now. I think a lot of new companies come along during the bull runs and they don't survive the bear markets. In terms of our investment strategy, we have done some things to maybe switch things up a bit to kind of adapt to the situation. One thing that we've done is we've actually contracted the number of assets we hold to kind of bring a bit more of a hyper focus to our investments, making bigger bets on the things that we think are really, the best things, as opposed to maybe having, more assets in our portfolio, which is, I think, expanding the portfolio is something we are more likely to do during a bull market, essentially, where there's more room for different projects, I think. So that's one way we've kind of responded to this situation as well. We're also building a few other products as well.
And I guess if I could ask you one final question.
Sure.
Year's coming to an end. You could ask Santa for something, anything crypto related. What do you really want right now?
For the bull market to come back.
I think
and I'm not saying that just because I want to see more value. Not because I want my investments to be worth more, which I do. I'm not going to lie about that. But no, because actually it's a lot of people like to say they don't care about price. A lot of people like to say that. But I think the reality in cryptocurrency is that price, utility, and fundamentals are very, very interlinked in cryptocurrency. So the more valuable a cryptocurrency is, the more secure it actually becomes, because of these network effects.
That was a pleasure. Thank you for your interview, and thank you for sharing your experiences and advice. So I hope when the bull market comes back, we could have this conversation again, and it could be completely different.
Yeah, absolutely.
Thanks, brother.
And hopefully not too different as well, because those fundamentals will stay.
Yeah.
All right, thank you very much. I thoroughly enjoyed this.
You have a good rest of your day, brother.
Bye.
Well, hope you guys enjoyed that interview. I think that was pretty great. And you know what? I'm willing to bet you 1 Bitcoin that we're going to talk to Justin again pretty soon, because we have so much more ground to cover. I don't know if you felt that, but there was so much more that we could have talked about. And I really hope to do that for you. So how about you guys let us know in the comments, who do you want me to interview next? Who do you want to see on Nakamoto Jedi? And in the meantime, hit the like, comment, subscribe buttons if you haven't already done so. Thank you guys. Have a good day.